Hey, I'm Dan Fitzpatrick at StockMarketMentor.com, and it's Tuesday, August 4th already. Okay, we're looking at Apple. I think, and I always try not to be too bullish when a stock is just screaming like a Netflix, or too bearish when a stock is imploding. You always have to respect both sides of the market. Every time a short seller sells a stock short, it is bought by somebody who thinks the stock is going to go higher. Okay, somebody's going to be wrong, period. Somebody's going to be wrong. That's the way it is in every single transaction. Somebody could have got a penny more, somebody could have got a penny less, whatever. Unless you're a high frequency trader, scumbag, then just shift that out to about 19 zeros and then a 1. Anyway, but I look at this stock, and this isn't the chart that moves me. This stock has been in a volatility squeeze for a long time on the weekly chart. Bollinger Bands, about 7.5%, almost 8% wide, although I can probably find a lower place. 7.5%, not super duper tight, but still sideways trading action for quite a while. Okay, 20 weeks. It's a weekly chart. Look at the volatility squeeze here. Oh, well, you could see, Dan, every time. And I've seen technicians do this. I saw one guy talk about how Apple was clearly going higher because he went back and looked, and all these, it consolidated for X number of weeks or months. Then it broke out and it ran umpteen percent. Then it consolidated again and it broke out and it ran umpteen percent. And it's just like the least robust analysis that I've seen in a long time. The bottom line is, if trading was that predictable, then just buy Apple and then sell it when it gets to 1,000. You know, a few years later, take your money and then you're done. Good for you. It's not that easy because at some points stocks peak, even though they're cheap. You know, I looked on Yahoo Finance. The trailing 12-month PE on this stock is 13.26. That is a dirt cheap stock. On the other hand, Netflix, the trailing 12-month PE on that is 272. Now, which would you rather own? Or excuse me, which would you rather have owned and still own? Apple? Would you rather have bought Apple here on, pick a date, February 27th? Okay, you're down 10% from February 27th. But the stock is cheap, for crying out loud. It's 13.26 PE. That's cheap. Netflix, on the other hand, who wants to own this dog? It's so expensive. Nobody's buying it, right? Well, where have you been here? This stock is up 80%. Yes, that's correct. 80%. The PE is 272. Which stock would you rather own? The one that is super, super pricey or the one that's not? Which stock would you rather buy right now with this chart on a weekly chart? Would you rather buy this chart or would you rather buy this chart? Me, personally, Netflix is a little scary to buy right now. We'll look at that. You know, it's a little scary to buy because it just feels like maybe it's kind of want to pull back. But, you know, breakout buyers would look at today's move as the buy signal. Okay, the high was 117.88, so breakout buying traders would look at the price of 118, and that's when they'd be into the stock. So this could actually continue to go up from here. But I digress. What I'm really talking about is this. Okay, this is not a stock that you want to be owning now. You want to be selling this stock, if not shorting it. Okay, that's it. Members, over to the strategy session.